Hello everybody, in this brief video I just wanted to kind of go over my experience with Robinhood Gold so far and show you what it offers. So without further ado, I'll get right into it, and here's the email I got right after I signed up for Robinhood Gold, and there's three different aspects that are an advantage to having Robinhood Gold, and I actually really only use one of the three of them. But the three are highlighted here. There's professional research, level 2 market data, and margin. So the level 2 market data, as you can see right there, monitor real-term bids and asks directly from NASDAQ. And for me, honestly, I don't use that too much. If you're a day trader or a swing trader, then that's definitely really great for you. But I really just do long-term investments looking for multiple years out. So it's really not too important to me to be able to view that whenever I want to. And then there's access to margin, which you instantly get access to $1,000, and I'll touch more on that in just a second. And then there's really what I do use, which is that first bullet bolded there, professional research, which I'm going to cover throughout the majority of this video, and it's make more informed decisions with in-depth research from Morningstar, and I'm about to cover that. But before I do, I just wanted to share what margin is. So margin is money you'll borrow from Robinhood to magnify your risk and reward. So to be completely honest with you, I think margin is a really bad idea in just about any scenario, but what it is here is you'll pay an annual flat rate on the margin you use, billed at the end of each cycle, and the flat rate is 5%, and you instantly get access to $1,000 of margin, and you'll only pay interest on what you use above $1,000, so it really depends on how much you have in an account. Obviously, if you have $100,000 of buying power, you're going to have a lot more margin than if you were to just have a $5,000 portfolio. But why I think margin is such a bad idea is I really don't think you should be investing money if you don't comfortably have money to invest. You need to have an emergency fund and other money set aside before you're investing. And even if you have a really safe bet for a stock you think you're going to make big money on, you probably have lost money before on a stock you are really sure on, and that's why you're using margin. So I really just think it's a better idea to earn money the old-fashioned way through your job or through some smaller investments, and you work your way up over time before you even consider using margin. There are rare scenarios when it can be a good idea, but I think in just about every scenario, it's best to completely avoid it. So now what I'm going to spend a bulk of this video going over is the research report provided by Morningstar, and I'm going to take a look at everyone's favorite stock, Tesla. So overall, Tesla gets a Morningstar rating of 2 out of 5 stars, and they have an economic moat of none, fair value of $231, very high uncertainty and standard stewardship, and all of these are further broken down. So then you can click and do it, and sorry that's kind of cut off at the top there, but you get some recent kind of news about the stock. We expect a rapid rise in Tesla deliveries after COVID, and then you get the author at Morningstar, and then you can further click into these, the thesis, fair value, economic moat, risk, and stewardship. So the thesis, here's a few pretty decently long paragraphs about Tesla, and this is really helpful if you're pretty unfamiliar with the company, or even when you are familiar with the company. It may kind of show you some things you haven't really thought about for the stock, and it's a really great idea to look into this, especially if you're unfamiliar with it and you're about to use a pretty good bulk of money. And then there's fair value. You kind of have to take this with a grain of salt. I've seen these really high and really low, and it really just kind of somewhat depends on the bias of the author, but for the most part, it is a good idea to take a look at this and kind of understand why they gave this fair value to the stock. And next up is economic moat. If you're not sure what that is, just in very simple terms, it's something that makes a company unable to be competed against. If you think about a pharmaceutical company with a patented drug, they have a really wide economic moat because nobody else can use that drug. Or you could think of even just a really strong brand as a narrow economic moat. And for the most part, I see Morningstar analysts as pessimistic with the economic moats, if you will. I often think of a really strong brand such as Coke with a really great economic moat, but Morningstar may not think so. And you can even see that here. I think Tesla would have at least a narrow economic moat with just their brand and technology. But here we can see we do not see a moat yet because Tesla is still relatively early in its life cycle. And it goes so on and so forth for a few paragraphs. And then next up is risk, which is really, really great to look at, especially if you're looking to hold the stock for the long term. You may see some things in here that you haven't really thought about before. And then lastly is stewardship, and I find that most stocks have standard stewardship on here, but I tend to not pay a lot of close attention to corporate governance and top management at companies. So this does sometimes have some useful information, but stewardship is probably the least of these different options, I suppose, for the gold research that I do use. Overall, I've really enjoyed just the market research for Robinhood Gold, even though I'm not using the other features, and I think there's a free trial of a month as well if you do just want to try it out, and then you've just got to make sure to cancel that. I make a ton of brief stock analysis videos, so be sure to come check those out if you're interested. Subscribe for more content, and thank you so much for watching.